Sup traders, let's have a look at all the trades that I took last week. Going into the week, didn't really have that many news until Wednesday evening when FOMC came out. And then on Thursday, we had loads of PMI news. And Friday, we had more FOMC, Fed speaking towards the evening, quite late in the evening. So wasn't really looking at the ones after 4 p.m. I took 10 trades in total and stuck to the two pairs, euro dollar and pound dollar, as I was supposed to do. And because of that, I didn't take too many unnecessary trades. So let's dive into it. For euro dollar, I was bullish going into the week, and I was looking at this 50% off this pin bar on the weekly time frame. And I was looking for shorting opportunities wherever I could, and potentially a long opportunity to take it up to the buy side liquidity or any other shorter resistance level on the lower time frames. Also, because we held this fair value gap, below this, above this equal highs, this imbalance last week at that 50% level, and price dropped, held this daily bullish fair value gap, which price is in a bullish order flow. So this holding right here and this engulfing candle failing is a good sign that bulls want to push price higher up. However, because we are at this fair value gap, last week's high was a good level for me to look for potential shorting opportunities. Price came into previous week's high, this is on the 1 hour time frame, at that 50% level and held. And on the lower time frame, I was looking for opportunities to go short, especially because on the 5-minute time frame, you'll see this is something I look for, or something I've been watching. And whenever you get small consolidation at key POI, point of interest, and you see a sharp close up like this, and then you start to see the bearish momentum or like bearish engulfing candles, I took a short here. My stops were up here, and then my target was, I wanted to target down to this level. However, as price started to move in my direction and made a new low, I took a target 1 off at this level, and then I moved my stops above these highs, and eventually price consolidates, ranges, power of 3, whatever you want to call it, accumulation, pushes up, manipulation, and then distributes to the downside and goes on to that 60-minute fair value gap that I was hoping price would find some support at, which it eventually does during New York session. As you can see, we got this market structure shift, could have entered on the pullback, stops below these lows, would have been a good trade, but it's a Monday, so ICT doesn't really, ICT says on his videos to wait until Tuesday for market to make the weekly low. So yeah, could have potentially entered here a long opportunity on the New York session on Monday for a short-term trade. You don't want to aim for a full-on bullish run on the Monday of the week. So that was one trade, and I took another trade on one of my main accounts after this market structure shift. And this displacement with strong bearish, fair value gaps. I took a entry on a pullback, or I was supposed to take it on the pullback to 618. However, because I saw this order block form, I was too eager to get into this trade because I thought maybe price would hit that 60-minute fair value gap before it pulls back, and I took a trade right above this order block with stops here, and then my targets there, and then my stops were right there. And eventually price consolidates, takes me out my stop, and then goes on to hit target. If I had followed my rules, which is market structure shift and then displacement with these fair value gaps, entry at 618, which is the ideal entry, right? 618, just around these levels, stops above, I could have given myself room to breathe at least like 5, 6, 7 pips, and then put my targets at this 60-minute fair value gap, or this 50% off that fair value gap, and still would have gotten a nice risk reward. However, FOMO got better off me, and I entered straight after this order block which obviously price has to push up and then hit what should have been the reason for entry. Anyway, price held that fair value gap on the Monday and it continued to push up on Tuesday. My drawn liquidity is still, up there. The buy side liquidity is still up there. We are approaching that buy side liquidity, and we also got now these fair value gaps right here above those highs that price can find resistance at. So that's something that I was watching out for. I took a couple of long trades on Wednesday. As you can see, price has been bullish. I expect price to hit that buy side liquidity below this fair value gap, and I was aiming for price to pull back and go up to that level. For our time frames, we had these bullish fair value gaps that I was looking at going into the day, and we also had these bullish fair value gaps on the 1 hour time frame, and I was looking at this, and also this order block right here was my preferred entry point of interest. I took a bullish trade after London session formed, price pulled back, and then started to push up. I took an entry after this displacement right here. Not my best entry because I was honestly not my best entry. Should have waited for further displacement or close above these highs, especially when it's not during the London or New York session. Then price drops, and then these highs are taken out, and I took half an entry, half a profit there, and then moved my stops above these lows because honestly I was thinking break even would easily get hit, so I didn't want to get break even and then price move in my direction. So I put my stops down there, just below these lows, and then price comes down and takes out my low, and this happens during 10 a.m. and as this candle was printing, because this was coming into a high time from POI in such a bullish order flow for me, I took a trade there, put my stops below there, and then took my target there. As that candle was printing, I got out straight away here somewhere, and then I got back in again because I was quite confident with the trade, and I believe I got in around somewhere here, and then I let the trade play out at least to the buy side liquidity. Could have let it play out until the fair value gaps 50% was hit. This one is interesting because had I taken the trade in New York session after this market structure shift, right after New York makes its low, takes out London's low at an order block, everything matches up. Had I taken a long around here, I would have been stopped out because I'm not sure if I would have put my stop loss below the 240 fair value gap. But this is something to remember. If this does happen and then price comes down, I shouldn't hesitate to take a second entry, especially if I am clear on my drawn liquidity. I think it's because there was no news this day. Price was just looking for liquidity. Because there was no news coming out today, it was, this is unexpected. Normally I would wait for news to come out and then price move to my point of interest, maybe the 240 value gap, and find some support. Because there was no news, I wasn't sure whether price was going to move to that 240 value gap or not. But even without the news, after the New York session, when I believe most people would have entered the trade, price pushed down and held that low, so held that 240 fair value gap. So that's something to note during no news days. And then on Thursday, price started to displace down. I took 2 trades on Thursday, 2 bullish trades around this fair value gap, trying to go for those highs after it rejected the bearish fair value gap on the daily time frame, and I got stung twice. And yeah, that's what it is. I've done a separate video for that, and I'm going to link it on this video, so check that out. So for pound dollar, I took 4 trades, and let's just get into them. So yeah, order flow weekly time frame is bullish. We've seen this after taking out these lows, price put in bullish. This gap was held. Then we've got this bullish fair value gap held, pulled back, bullish fair value gap held again, and it looks like price is pushing up to this buy side liquidity of last month's high, or at least this liquidity level. However, I do look for short-term lows, short-term shorts as well in that direction, and we've got bearish daily time frame fair value gap right there that price can come into and provide some short-term trading opportunities. So yeah, price is approaching this daily time frame fair value gap 50% with this almost channel formation, and I was looking for opportunities to go short on the lower time frame after Asian high were taken out. Yep, and then we go up, push above that high. First, I take a short right here at this level, and I get out immediately from that trade because I not feel comfortable with it. So yeah, price came into the highs of this daily time frame fair value gap. This looks like a trading opportunity normally for me. However, because I was already involved in the trade on euro dollar, I didn't really want to get involved in this either. And also, although with London sessions just started, ideally want to see that being taken out as well before looking for opportunities, especially we've got, Asian session manipulation going on. But what we see is price accumulating and then eventually taking out those highs and then displacing down. I didn't take this trade, so yeah, we've got this failed retest followed by displacement and fair value gaps. That price holds and then pushes down into I believe just an order block on the 60-minute time frame. I took a trade around here at this pull displacement, and then I was too late. I saw we tapped into this Asian low, and I got out that trade straight away with almost break even. So because after we tap into Asian low, we form, this is a New York session, we form a low, that low gets taken out on a Monday, and then price pushes up higher to form a new high. It could come back to this low again on Tuesday, but that's for a different day. On Tuesday, price comes into this buy side liquidity at this high, and I am looking for a shorting opportunities at that level. So we'll just see how it approaches up to that high. I was waiting for like a sharp movement up, and after that I was looking for any kind of a suggestion that price might move lower. I believe I took a short here with stops above those highs, and then I wanted to target these low at least. So yeah, even though I was targeting here, as price reached at these lows, these equal lows, I took out my position and I was done for the day. And then on Wednesday for pound dollar, I took another short after price came into this highs from Tuesdays. We had this buy side liquidity that was taken out, right? Doesn't matter what happened on Wednesday, we had this buy side liquidity that was taken out, and I was expecting price to hold yesterday's highs or Tuesday's highs, but given we're such a bullish momentum and order flow going on, these are really weak point of interest for me to be looking for shorting opportunities. So yeah, as we approach this high, right, we had the Asian session, we had the London session making the low, and then displacement with market structure shift, and then pullback, and then further displacement in New York session. So, and I took a trade as this candle was forming. I took a short right here, and then I got out pretty much just above here, because I didn't see price coming down to these lows, especially in such a bullish order flow. So I got out that trade straight away as well. Honestly, because my mindset was so fixed on bearish trades above this buy side liquidity after taking out yesterday's high, I did not look for any other possibilities. But yeah, I'm glad I got out that one, because it eventually pushes up to start a new high. So yeah, those are the trades I've taken this week. So yeah, these are the trades that I took this week. 10 trades in total. 3 good trades. The rest were just average trades. There could have been, those are the trades that I want to eventually just eliminate from my trading, because the high time frame POI is most likely on a 60 time frame, which is not really strong enough, and the order flow is normally in the opposite direction. So it's all of these short trades that I've taken. If I just stick to the long trades, it would have been fine because the order flow was bullish going into the week, but we did come into some strong, higher time frame POIs on the daily time frame. So those opportunities, they provide some opportunities as well. So I can't just dismiss that either. But overall, I took less trades than last week, almost 5 less trades than last week, and that helped a lot in refining the trades that I took, because last week and the week before I was taking a lot more bad trades. Whereas this week, personally speaking, I don't think they were bad trades. They were just trades that were in good locations, but not particularly convincing enough. And that's my review for the week. I'm going into next week again. I want to avoid taking as many okay trades as possible, and mainly aim for the order flow on the higher time frames and take trades in those directions, unless there's really, really good counter opportunities at strong POIs. Then I'll be looking for those on the lower time frames.